Germany is barely larger than it was a few years ago, and the manufacturing sector is really struggling. We're starting to hear whispers in economic circles of a larger interest rate cut potentially. Europe's Q3 numbers are in, and it looks like Germany is going to be avoiding a recession, and Europe is growing like a snail on a mission. Now, Europe did beat expectations in Q3, and in this video, we're going to analyze the data, talk about the Q3 numbers. We're going to discuss what it means for the economy in Europe and also globally as well. Now, before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Europe's economy grew by 0.4% in Q3. Now that was bigger or double the expectation at 0.2%, and it was also larger than the Q2 numbers as well at 0.3%. Now Spain and Ireland were some of the biggest gainers in Europe, 0.8% for Spain and 2% for Ireland respectively. Now Germany, which is Europe's largest economy and arguably the most important economy on the continent, was able to avoid a recession with growth of 0.2% for the quarter. Now it was expected that Germany was going to post negative numbers for consecutive quarters and they were going to enter a technical recession, but fortunately, they were able to avoid that. Now, 0.2% is not great numbers by any means. It's not anything spectacular, but you will take that growth over contraction any day. Now, Germany is barely larger than it was a few years ago, and the manufacturing sector is really struggling as well. But you will take a win when a win presents itself. Now, business activity and consumer confidence on the continent are expected to increase in the coming months, with inflation being down below 2% and interest rates dropping recently and expecting to drop even further. It is expected that business activity, consumer activity starts to pick up, but these things might come in rather slowly. It's not going to be at a fast pace. It's kind of going to go at the European pace, you know, that slow snail stagnation type of way, but nonetheless economic activity is expected to only increase. It came in positive in the third quarter at 0.4%, and it is expected to only increase from there in Q4 and moving forward. Now, the European Central Bank did cut interest rates for the third time this year at their meeting in October, and they also cut interest rates in back-to-back meetings, which is rare for the European Central Bank to do. But with weak economic activity, and it's been going on for quite some time now, the central bank is starting to get more aggressive in order to reach the growth targets that they want. Now, inflation is down. It's down to 1.7% numbers recently, which is below Europe's 2% target. And this last rate cut in October did bring Europe's benchmark rate down to 3.25%. Now, it's widely expected that Europe is going to cut interest rates again at their meeting at the end of the year. Now, also interesting to note is that at their last meeting, a 0.5% or a more aggressive rate cut was not even on the table. It was not even discussed at that time. But you are starting to hear whispers in economic circles of a larger interest rate cut potentially taking place. Now, obviously, the United States did it recently, and it was all in the news. You know, that jumbo 0.5 rate cut. Now, a lot of developed nations, the central banks do not cut like that unless they absolutely have to, if the economy warrants it. Now, I personally do not think that Europe is going to cut by 0.5%, go that aggressive approach. I think to end the year, they're going to cut another 0.25%. It'll be 4 rate cuts in a year. It's 1 point over the course of a year, but you have more analysts and economists that are starting to think that Europe will go bold to end the year. Now, economic activity for the third quarter came in, pretty positive. It's something that they could be happy about. So just knowing how the central bank acts and moves, I don't personally see them going that aggressive way, but I could be wrong. I've been wrong in the past, and if they did, it would obviously send a message to markets. But a lot of people are starting to whisper about the potential of a larger rate cut in Europe to really get the economy going and to get some positive momentum. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.